In this video, we are going to talk about OPEN and more importantly, the nearly $3 million worth of unusual options calls that entered the market today, expiring in September. We're going to go over what this could actually mean for the stock and more importantly, how you guys can read and understand unusual options flow and how I've been able to use them to grow my portfolio to over $5 million in the past 5 years. I want to first start by saying that while I am sharing this flow with you, I am not taking this position. The main reason for this is because number one, I do not want to trade something this volatile. I will not trade penny stocks. It's against what I do. Number two, the implied volatility is ridiculous on these options. If you don't know what implied volatility means, I highly recommend that you go to our free masterclass series down below. All of our courses teaching our system are free down below. And go down to the Options Trading Simplified course. This will explain to you how to trade options responsibly, explain to you actually how to price them correctly, what the Greeks are, and more importantly, it's all done simply within a 30-minute course. Now, when implied volatility is this high, what it's going to do is jack the price of the premiums, or basically how much the contracts are worth, significantly. And then what happens after a significant move happens, the implied volatility reduces. Now remember, if there is a direct relationship between how much the contracts are worth and how high implied volatility is, then if implied volatility gets removed from the stock, then that means the price of the premiums will go down, which is not what you want. This is why sometimes people will buy call options or put options before earnings. Implied volatility will be high. And then on top of that, the next day, the stock will actually move in the same way that they expected, and they will not make a big return because the implied volatility is hurting that contract. Now, the reason I am making this video is because I know that there are a lot of people out there who are trading OPEN, and I'm not sitting here trying to engage or get engagements or engage farm. Like, I don't give a shit about that. I just want to actually help people if they want to trade something like this, which once again, I don't recommend, to do it responsibly and understand what they are getting themselves into. Now, let's talk about this flow before we actually look at the chart. So a flow is basically a sequence of trades that happens on the options market. Now, the reason that we focus on the options market is it's significantly easier to follow and find unusual buying patterns than it is just watching the tape on shares, because there's much less volume. There's significantly less volume that happens. Now, what makes this option so unusual is basically three parts. The first thing that we want to see is size, meaning that this has to be a big order. And if we look, we have 1.3 million plus another 6 million plus another 6 million. I'm sorry, 600,000 and another 600,000 plus another 600,000 and another 700,000. So that's like just slightly at or above $4 million worth of call options, which is absolutely insane, especially for a penny stock. The other thing is they're deep in the money at $1.50. This isn't somebody who's buying $4 or $5 calls that are out of the money. Even though this is a ridiculously risky play, the fact that the strike is actually deep in the money is a good sign. Now, this person was buying between $2.75 and $2.87, and right now OPEN is trading at $3. So they're already up like 28% on that $4 million. So this person has already made $1 million. The second thing that makes something unusual is urgency. So what we want to see here under type is sweep. If we have more sweeps, the better. This means that it's all filling on one exchange and they want to get in the position as fast as possible. More importantly, we want to see this detail at the end of all of these orders, which is _A or _AA. This means that they are getting in at the ask or above the ask. This is very important for two main reasons. Number one, shows urgency. They are overpaying to get into these contracts, which means they think the stock is going to move. Number two, it's important because it's confirmed. This is not somebody selling covered calls. If they were selling covered calls, it would say _B or _BB, which means at the bid or below the bid. And the last thing is we want to see time. So we have time, which means this isn't something that expires tomorrow or next Friday. This expires in a couple of weeks, at least 1 month. So we have size, over $4 million in calls, time expires within a month, and urgency, which means we have sweep and A or AA, which is a very, very good sign. Now let's talk about this from a technical perspective. If we look at OPEN and we use our volume profile indicator on the right side of your screen, which you can learn how to get and set up on your own, learn how we use it in our volume profile course for free, you will notice that this indicator shows not how much shares were traded within a day, but where within the past 3 years the most amount of shares were traded. And that area is right here at $3. The wider the area, the more shares were traded. Now, this is important because this is called our point of control. And this is important as well because this acts as major resistances and major supports. So there's a good chance that this rejects off of $3. This is a big reason why I'm also not touching it. But this is important because if we can close over this point of control, when we have these thin areas such as $3 to $5, these feel like hot knife through butter. We could see a potential 40, 50, 60% move within like 30 days if we're able to push through that $3 level. So it's a very, very key distinction. If we can push through that, then we're definitely moving up to $4.50 or $5 very easily. If not, then we're going to come back down. Overall, I hope that this video helped. As I said, I am not touching this. I wouldn't touch it with a 10-foot pole, but I thought that this would be a great case study to share with you guys. First of all, if you are trading this, some levels that you should look out for, and more importantly, how to trade things responsibly. But for anybody who's interested in just actually trading options responsibly or learning how to read options flow, this would be a good tutorial.